when somebody sits there and you're like, okay, I'm going to build a company, right?
Yeah.
If you build a company and you're going to take the money, you're going to say, I'm going to reinvest it in whatever I operate, okay? And what I operate, I can foresee growing it, pick a number, 100% a year, okay? Even if you grow a company 100% a year, let's just say your first year you do whatever, $1 million, okay? Second year you do 2 million, 4, 8, 16 million, 32 million, 64 million, 128 million, 256 million, $500 million, 1 billion, 2 billion, 4 billion, 8 billion, 16 billion, 32 billion, 64 billion, 128 billion, 250 billion, $500 million, 1 trillion. Let's look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. If a person started a business today that did $1 million this year and they grew at 100% the next 20 years, even in 20 years when you're a $10.5 trillion company, they're just going to be a $1 trillion company. So you're seeing this as, rather than operating a company, we're going to be better off just knowing what's going to happen to Bitcoin because Bitcoin is going to be the next Manhattan.
Basically, what I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that. But right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, you can figure it out from the law of large numbers. When Bitcoin's a $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365, and it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like.
I think this is what you showed, right? You were showing this at
the
presentation
the chart.
we're at. Bonds, gold in the last 4 years, 6%, real estate 10, S&P 15.
That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. That's why we outperformed NVIDIA. We're 2 or 3x NVIDIA over this time period because we're actually capitalized. Now, coming back to the idea of growth, look, the big idea here is there's $450 trillion of money invested in bonds, invested in real estate, invested in equity by wealthy individuals, families, and institutions, and it's just for a long-term long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century. And those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war and inflation and competition and obsolescence and accident and torts and unions. And fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. That is to say, I'll give you an example. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. I'm like, yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch. So most of the time people have to take risks and then they got to worry about it. Bitcoin is risk stripped away from the capital and inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%, and then you get an additional gain because we invent robots and AI and flying cars. And so the actual S&P index is growing because the U.S. prints more dollars, but it's also growing because we invent obscenely cool, useful things like the iPhone or like an electric car. So the future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. And it makes sense for us because we're a pure play, right? People want us to do that. I mean, the people that are short, they want us to be pure play. The people that are long want us to.
That makes sense. It's a very honest relationship both ways. The guys that want you to fail, they want you to think long-term because they want you to fail long-term. So you're patient about it. So they're going to make money off you. But the guys that are also pro you, they also want you to be long-term, that you're patient with it. And I get that part.
Yeah.
I guess the question, and the part that you explained, which was very simple, was this is something anybody can do. It's duplicatable. I'm not sharing anything with you that's complicated. Rob, can you go to that one slide that he shared about Manhattan, which I think is the best one? If you can go to the one with Manhattan where you're breaking down the different ones that he had. It's right there. Yeah, this is the one. 1626, Manhattan. Can you zoom in a little bit, Rob, so I can see it? What was it, 60 guilders?
What I'm saying is if you have a chance to buy Manhattan for 60 guilders in 1626, you should buy it. But what I would say, which is deeper, is you could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. And that's because it's the greatest city in North America. Yeah. Everybody wants to do business there. There's a limited amount of land. It's a perfect rock, limited amount of land. So there's never a bad time to buy Manhattan.
But even if you look at this though, Louisiana, we bought it for $15 million, APR 6.3, payoff 12 trillion. California 1848 for $18 million, 7.78 trillion. Alaska for $7.2 million in 1867. It's $1 trillion, 7.8. You're saying Bitcoin's going to be 240 trillion in 21 years.
Yeah.
Yeah. Just very easily, the way you say it, it's not a big deal to you.
I mean, look, the takeaway from that slide is the key to getting rich is by scarce desirable property, pay for it with fiat. How much is a guilder worth today? Like, pay for it with money you printed, borrow the money. But, we borrowed the money to pay for Alaska. I mean, the country was broke in 1867. We just fought the Civil War. But what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so number one thing, buy the property. Number two thing, hold it for a long time, right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace. And the real point is Chinese billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the U.S., but they can't get it to the U.S. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything. Right? The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company.
I don't know if you see it or not, but a lot of big moves are being made in business right now, specifically since Trump won the election. Musk's net worth just crossed $300 billion. MicroStrategy's CEO, Michael Saylor, who just pulled up right now to the building, I'm about to do a podcast with him, just announced today, you ready? He bought $4.6 billion of Bitcoin today. You think he's making a statement? Everything right now, behind closed doors, people know the next 4 years is going to go quickly. You either capitalize or you're going to be left behind your next 5, 10, 15 moves. In 2020, when Biden became a president, everybody was panicking. We had a major meeting, identified our next 15 moves. We knew what we wanted to do the next 4 years between 2020 and 2024. We capitalized off of it. Tomorrow night, Tuesday night at 6 p.m. Eastern Standard Time, I'm hosting a free webinar to share with you what we did and what we're doing now between 2024 and 2028. If you want to join us, go to vtwebinar.com. VT, like Valuetainment, vtwebinar.com. Register. I'll see you there. It's limited to only 5,000, so get registered. If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.